Hey guys, this is John from Balcony DAO. I'm over here at ETHDenver talking to other founders of DAOs, getting a sense for their project and chopping up a bit, trying to see if we can't learn from each other in the spirit of DAOs. I'm sitting here today with Mark and Adam. These are two good founders who apparently have known each other their entire lives, so these are longtime friends and founders. They're going to tell us a little bit about MIDAO and Shipyard, and we're going to see what kind of connective tissue there is here in what you guys are doing and what I'm doing at Balcony DAO, which is a real estate-backed NFT DAO. So I'm merging Web3 and real estate, dealing with some real-world issues. And I think you guys are kind of dealing with some of the same real-world issues. And I want to see if I can't learn a little bit from you and see where our experiences overlap. So why don't you take us in and give us an idea of what you're working on and tell us how you stumbled upon this DAO, why this project?
Sounds great, and thanks for having us.
Yep.
So my name is Mark Lurie. I'm the founder of Shipyard Software. We are an exchange group for decentralized finance. So you may know NASDAQ or New York Stock Exchange. They don't run one exchange, they run many exchanges. Similarly, we build multiple specialized exchanges for decentralized finance. Our first one is called Clipper.exchange, and it's focused on retail traders. So if you are trading under $10,000 per trade, the best prices will be on Clipper.exchange. And like many DeFi projects, the decentralized exchange, or DEX itself, is run in a decentralized manner. We create the code, but then it's run by its community and administrated by its community. And that means DAO. And so we're decentralized in governance. Now, for us, the issue is that, a DAO is kind of an abstract concept today, right? It's a group of people, I guess. And that creates a couple problems. The first is, you can't hire people and you can't sign contracts. You can't own property. There's just a bunch of practical constraints. And the second thing is creates unlimited liability, because if you're not incorporated, you don't get limited liability. And limited liability is really nice because it prevents you from being sued for everything you're worth if you make a mistake. And so we wanted to incorporate our DAO to get those things. And that turns out to be a really tough problem. And that's what we grappled with and how I came to the DAO space, and also how Adam and I came to be working together again.
On MIDAO.
On MIDAO.
Right.
Yeah.
Okay, so when you made your product Shipyard, your first sort of friction point was, how do I safeguard my assets inside of this new framework? And that is how you came to start working with Adam on MIDAO? Was that actually what brought this about?
Yes. When we thought about what is a DAO, we thought, well, they don't really exist in the real world, right? They don't exist in any one country. They're kind of outside of every country. And, our company is Shipyard Software, and the reason we named it Shipyard Software is because we think of these decentralized things as like ships. They're built and then they kind of sail off in the ocean. They're in international waters. They have no nexus to some country. And so I thought, well, a DAO is kind of like a ship. How do ships do it? How do ships incorporate? They spend all their time in international waters. And it turns out there's an answer, which is that 20% of shipping capacity in the world is registered to a small country in the South Pacific called the Marshall Islands. And so we engaged with them and we said, hey, you have...
Hold on a second. What do you mean you engaged with them? Like, you call up the island to be like, hey, what's going on? This is Mark. I have a liability problem. Please direct me to your liability ambassador. Like, what the hell are you talking about?
Yeah,
how does this work?
That's essentially how it works. So they are a very well-established country. They're a former U.S. territory, associated to the U.S. They have about 60,000 people, over 1,000 islands. The U.S. Postal Service serves them. The U.S. military protects them. A few years ago, they passed a law that issued a national currency on the blockchain, a CBDC. And so they were kind of in the blockchain crypto space, and I was around in 2018-19 in crypto, so I got to know a few of the people working on that project from the Marshall Islands. And so I knew a couple senators, and this one, David Paul in particular. And so we all got talking and explained the need.
This is awesome.
And they realized the opportunity. And and Adam has like exceptionally deep understanding of DAOs. And we put our heads together, and they passed a law that essentially bridged the most complicated parts of doing a DAO, which is, a normal company, the bylaws have to be in paper, right, with the government, and that the courts can look at, and the shareholders and members have to be name and addresses. And they essentially said, well, okay, like in the Marshall Islands, you can have a company where the bylaws are smart contracts on the blockchain, and the register of members is wallet addresses, token holders.
Anonymous.
Yeah, it can be anonymous. That's right. And so
you're ghostwriting legislation in the Marshall Islands.
No, they write their own legislation. They're serious people, but we explained the need, and they understood the need
and responded to it.
Yes, because
what is that, democracy or something? Like that sounds like that's incredible.
Yeah, it is incredible. It's a democracy, and it's a very nimble place, and there's a reason that 20% of ships are there, and part of it's because they know how to do this, right? Like they serve ships in unique ways with unique entities already, maritime entities. And so, it really, they use that same infrastructure and understanding and conceptualization and just made some tweaks for DAOs, which are very much like ships in a lot of ways.
This is wonderful.
Yeah.
They are very much like ships. I love the sort of analogy there. I love that you were able to reach out to people who actually gave you an honest ear and then acted upon the very good counsel that you provided them and feedback from this community. And when was this?
This was all in the second half of 2021.
Oh my
so
God.
It happened, they're really seizing the opportunity. They're leaning in. They're like, inviting DAOs in. And but I don't want to say like it. It's not like this was me, right? Like I had the need and helped prompt a conversation, but like it took Adam to help understand the DAO space. It took really the Marshallese government and a few people there in particular, to push this forward, and a couple of really great lawyers.
But it sounds like the result is there's now a better place to domicile DAOs than even Wyoming.
Yes.
I mean, this sounds like the ideal place to domicile a DAO.
That is how everyone has different needs, but for our needs, and I think a lot of DAOs, it is ideal because the other places have problems. Like Wyoming, we looked at Wyoming, but first of all, it has some like practicality issues. Like you need a quorum of 50% to have a vote for a DAO. Like you can't even vote unless 50% of people show up, and that's like a tough thing, right?
Yeah.
Second, it's not federal, it's state, so there's some tension with federal rules and laws. And then third, there's some IRS issues. Yes, like
Cannabis 2.0 basically.
Yeah. And there were similar problems with Caymans and and Switzerland, namely like you're doing a lot of legal massaging. They don't actually say you can just use the blockchain, right?
Right.
So you're using these complicated structures. It takes 6 figures of legal structuring, and by the way, you have to appoint directors who can just choose to ignore the token holders. So that sucks. There's Panama, but they're on the OFAC blacklist. It doesn't scream legitimacy. And so here we have a very simple structure. Just says what you're doing is okay, and it integrates you into the legal system, and I think it's great.
Wow.
For everyone needs to go through their own process. Every jurisdiction is different, but I think it's great, and like I really appreciate MIDAO and Adam for like hand-holding us through this process. It was a great experience.
So Adam, I'd love to hear from you on this. Like, first of all, why do you have such a good knowledge of DAOs? Like, what brought you to the DAO space, and why do you know so much about it?
Sure, yeah. So, for me, it also started with a personal experience that led me to want to devote my life and my career to DAOs. It started so I've been in crypto for a while, but this journey started several months ago when I was hearing about all the DAOs in the news. I was seeing what they were accomplishing, the money they were raising, the ways they were interacting with the blockchain. And I was actually playing hockey one night, and I said to some of my hockey buddies, hey, I'm going to start a DAO. I want you guys to throw in some money. We're going to go buy some NFTs together. And they were like, cool, we'll each throw in a few $1,000. It sounds awesome. I had to explain it to them, but then they said, yeah, we'll do it. And I said, okay.
Wait, what NFTs are you buying, by the way, just for color here?
We were going to buy virtual land in the metaverse on OpenSea.
Okay, nice.
And I told them, yeah, by the end of tomorrow, I'll have the DAO set up. It'll be ready for you to buy tokens. And later next week, I'll submit some proposals. We'll all vote on the proposals, and we'll collectively own land in the metaverse. Now,
Just have an aside here. When Adam says stuff like that, I listened because Adam in 2013, or 2012, I think, 2012, told me, hey, there's this thing called Bitcoin.
Right.
And I bought my first Bitcoin from him at $200 for Bitcoin. I bought 3 Bitcoin. So he has a good track record with this stuff.
Thank you.
So,
yeah, luckily,
so in your friend group, you're the guy who's in the know. Like
Yeah,
everybody has
yeah,
that guy
yeah.
in the friend group where
Yeah.
he's like,
Yeah.
you guys should really look at the Marshall Islands. Like there's always that one dude. So Adam's
Yeah.
that guy. I get. So now I understand who you are in this.
Yeah,
And you were part of the initial DAO. You were one of the original NFT buyers.
Well, here's the thing. Is that what I found was that it was actually impossible to do what I wanted to do on chain. I spent weeks trying to make this happen, and if you have your own smart contract developer, you can do it. But even today, to actually bring together a group of people to buy tokens that actually act as governance in a DAO, and then use that DAO to collectively purchase NFTs on OpenSea is virtually impossible. There are so many limitations with the current tooling.
Wait a minute. Is that really true? Like, explain to me why that's impossible.
So, there's a couple things. So most DAOs that you hear about today are actually a group of multi-sig holders who are controlling a Gnosis safe, then who they're expected to take action based on what the DAO members vote and decide. And so you're not actually controlling the actions of the DAO with your voting and your governance in the DAO. So you may have tens of thousands of people voting, but at the end of the day, you're relying on the 5 or 7 or 9 Gnosis safe multi-sigs to act in accordance with what the community is saying.
Okay,
what I wanted to do was real on-chain governance, where the community holders have direct governance rights over the actions of the DAO.
Right. So, to your point, the Web3 space is vernacular, is sort of like a vocabulary of convenience. Like we talk about decentralized autonomous organizations, but there's an enormous disconnect between the inputs, which are the members, and the outputs, which are the actions. They're not on chain, they're not automated, they're not correlated.
Yep.
The gap is bridged by some kind of like weird faith that we have in some sort of representative democracy that exists within DAOs, and we just expect that these people that are principled people that believe in the ethos of this space are going to act in accordance to the spirit of some idea that we have. But you're right, we're actually full of shit. Like it's not really happening the way we think it is.
Yeah, that's how the majority of DAOs are operating. Now, there are now a number of platforms, probably about 15 platforms that have launched over the past several months that allow you to have real on-chain governance and on-chain, and not just on-chain governance, but on-chain treasury, on-chain interactions with other smart contracts and other Web3 applications. So actually, DXDAO is a good example. I'm just a member of DXDAO. DXDAO does everything on-chain. Control a few DeFi products that the DAO has created, control a treasury of nearly $100 million, control paying contributors, control interacting with other smart contracts. So it is possible to do everything on chain, but it's very rare because the technology platforms aren't there yet. So these 15 or so technology platforms, things like Aragon and Gardens and Colony, and a number of DAO House, which is based on Moloch, or DAO Stack is a popular open source framework. These are all frameworks that would allow you to go create a DAO in one click effectively and manage your DAO and do a lot of stuff on chain. But these platforms are very limited today. It's amazing what they're doing, but each of them has had to make very specific design decisions about how a DAO should work that don't work for every DAO. So the configuration isn't there, they're buggy, the documentation isn't there. They usually have had to select 1 or 2 chains, so they're not multi-chain in the way they need to be. So there's there's a lot of limitations with the current tooling that make it very hard to actually do your governance on-chain. And I wanted to do a real DAO, right? To bring it back to the story. So I wanted to have a real DAO. I didn't want to have a Gnosis safe or my own wallet was like the DAO, and I'm going to let my friends think that they're voting on the blockchain, but really they're just telling me what I should do.
Right.
So this led me eventually to start a DAO consultancy called DAOplatform.io. And so that's my previous experience before coming to MIDAO, is consulting for DAOs on everything from strategy to a lot of tech stack consulting. So what's the technology that you are going to use to run your DAO? Are you going to use Gnosis and say Snapshot for voting and trust the multi-stakeholders to enact the will of the community? Or are you going to use one of these other platforms? What tech are you going to use for tokenization, right? And are you going to do NFTs or are you going to do fungible tokens? How are you going to create them? How are you going to distribute them? How are you going to airdrop them? Things like that. And then finally, community. So what's a tech stack you're going to use to actually allow your community to engage with each other, to have meaningful conversations and interactions, and to even socialize with each other? So there's a lot of new Web3 tools that are allowing people to interact in more decentralized ways. Everything from chat to task management and other types of collaboration, the incentivization. So how do you reward people for contributing to the DAO? So that was my prior experience, was really understanding the tech landscape and the strategy for DAOs and helping people and DAOs figure out how to launch and operate their DAOs.
You can see why, when I had this problem, I reached out to Adam and said, help me.
I'm over here trying to figure out how much equity I have to give you guys. I'm like, okay, all right. This guy knows his DAOs.
Yeah. Now you got to remember, DAOs haven't been around for very long. Yes, technically, several years ago there was the DAO on Ethereum, and of course Vitalik Buterin has been writing about DAOs for several years. It's something that a lot of us have been excited about for a long time, but it's really only the last several months that this technology has even reached a point where it's accessible to Web3 natives, let alone someone who's not a Web3 native. And so there's been a Cambrian explosion over the past few months even of people wanting to start DAOs and actually being able to get started and get things moving. I don't know if you've had a similar experience with Balcony DAO, but
I found everything to be totally impossible. Everything and then my problem is after you get past the initial pain of like, okay, I've decided I want to do a DAO. Where do I incorporate? Do I make an LLC and then have the DAO own the LLC? Then I have the next issue once you get past that, which are the regulations specific to owning real estate, buying and selling real estate, state requirements for licensure to buy and sell real estate. Then I have the regulations of the SEC because these are securities as well. You start to layer them up, and none of these, in DeFi we talk about Legos, right? And the idea is like to build an entire world where you could just kind of snap pieces together. And to a large extent, I think what you're talking about, these like one-click DAO solutions. To me, I'm like, okay, that's a use case. They've made an archetype, which is what we're doing in real estate. Make an archetype for a specific type of a user, right? So the first archetype, if you were building that product, would be, what if a guy has 5 friends and they want to buy a CryptoPunk, right? What does that look like, right? Does that work for real estate? No. But if you could solve that problem for 5 people doing it, maybe that's scalable to 50 and it maxes out there, but then you have an off-the-shelf product that has completely solved that issue on all 4 corners of the page, and it's there. You can just go and pull it off and use it, and it's cheap and it's very useful, which is how I'm approaching real estate. It's like you have like hundreds of different asset classes, really, or different types of deals, and the combinations or permutations of different capital stacks. And I solve one of them first, and I leave it up there, and then you can go and grab it and you pull it down. The problem with what I'm doing, though, is there's nothing even close to what I want for the kind of deals that I need to do, the structure, the way that my DAO needs to work. There's nothing even close. Like, it's not about like hacking a little code and I'm almost there. I'm not 10% of the way there on anything that exists. I have to make all of it from scratch, which is horrible. It's time consuming, it's expensive. One attorney who called up, he's like, listen, first conversation, he's like, just want to let you know, before we get into this, today's talk is free, it's going to cost you $1 million. And that'll get you through the next 6 months. Mm-hmm. So you spend $1 million to get what you want done. This is a very expensive attorney, but still, it just doesn't work. It can't be.
Yep. And you're first, right? I mean, this is a problem that I think a lot of people are really excited about going after. Even people that are not Web3 native love the idea of somehow digitizing real estate, but the execution of it is probably going to be one of the most challenging and one of the biggest opportunities in digital assets.
Look, it's impossible. I tell everyone, even like investors, I'm like, look, I just want you to know it's impossible, and we're trying to do something that is incredibly challenging, and I want to be successful for it for this industry, because I think that it'll have a huge positive impact on these assets and on people's ability to access the value of these assets. I think it really will democratize it. But it's really, really challenging, and so MIDAO solves a singular problem, right? And so like you've built a Lego in the DAO space that I could use for at least one portion of my litany of manifold problems that I'm trying to navigate. At least there's a thing there that I can reach out and grab, right? So like, tell us now, you've found all the problems in the NFT purchasing with the multi-sig, and you're like, this is bullshit, what'd you do?
So, at first my thought was to set out to build technology to solve this problem. And frankly, the conclusion I came to was actually that it was a little bit early to even try to do that. It felt like such a huge and intractable problem to build one platform that works for all DAOs today, that I decided for now to focus on evaluating and understanding the landscape of technology that does already exist and helping people take advantage of it through consulting and templates and things like that and other services. So that's how DAOplatform.io actually became a consulting firm. And the thought was that eventually we would say, okay, now it's time, we're going to build a tech stack for DAOs. But a lot of people are going after that problem now. So I've met several people just the last couple of days who are well-funded, and they are building tech stacks either for particular types of DAOs, or they're trying to build that general platform, at least for governance and tokenization. The community element, I think, is being approached by a different group of people. But the tokenization and governance, a lot of people are working on that problem now, and I think in the next 6 to 12 months we'll see a lot of product launches that start inching us towards a better solution.
You're kind of like a no-code for DAOs.
Yeah, and I think it's a hard problem because there's so many things to do and so many different ways to tackle these problems, and it's at the point in the space where flexibility is important, because it's not even that we don't have the technology yet, it's that we don't have the best practices yet, and without the best practices, it's not like you can code up the things that work, because we need to figure out what works. And so I think that's why incorporation was especially important for us, and why we turned to MIDAO, which Marshall Islands DAO, MIDAO, they basically walked us through the process, and I think focused in on like a very specific need and just nailed it.
Awesome.
And that was like, honestly, it just like breathed a sigh of relief.
How many people have availed themselves to this tool so far?
One, we launched a product 2 days ago, and our first customer is Shipyard Software.
Oh, that's amazing.
Yeah,
that's
so
amazing.
Now I have a huge backlog of people waiting to reserve and learn more and get started. But just to bring the story full circle, so the reason I decided to shift focus and work exclusively on MIDAO is you've got this extremely challenging tech stack problem that's going to take a long time and a lot of capital to solve, and then you have this extremely important problem of legal entities for DAOs. It's actually extremely easy to solve. We've kind of solved that problem, and now we just have to walk DAOs or people starting DAOs through our process, and with a very low expense compared to building enormous technology platforms, and in a very short period of time, we can create enormous value for huge numbers of DAOs over the next several months. So that's why I think MIDAO is such a cool opportunity. It's just so valuable, and it's not even that hard to do or expensive.
You're also like Lego 1 in DAO land. Like you're the first step in the process.
Yeah. One guy approached me the other day and said, I'm working on starting a number of DAOs. I want to buy 20 of your LLCs so that as I start these DAOs, we have legal entities out of the gate, right? And the nature of these LLCs is they're very, very easy to transfer ownership or membership in the LLCs to new smart contracts or new teams. So yeah, it's
What's
easy,
the
it's early.
cost of this product?
It's single-digit ETH. So I think it's very affordable compared to something like hiring a legal team to set up legal entities in the Cayman Islands. So It may vary a little bit based on timing, volume, the nature of the DAO, but it's single-digit ETH.
My attorney's going to be pissed.
Yeah, I'll bet. what'll be important is still to use attorneys for a lot of the other problems you're facing legally, right?
Yeah, but this is stupid
tokenization,
stuff.
securities,
Yeah.
even composing legal structures. So I heard some lawyers over the past few days talk about composing our LLC entity, the Marshall Islands LLC, with other legal entities, so that you can kind of get the best of both worlds in terms of the purposes of these different types of legal entities, and have them interact in the right ways for your DAO.
Yeah, I mean, the org chart, the flow chart of these DAOs and the structures, I mean, I'm looking at mine, where you have like the operating entity, the DAO, which at the moment we were going to do a Wyoming DAO, a DAO LLC, although maybe we won't. Then there's like the founders have a separate entity. Then when we make an acquisition, we have a single purpose entity that acquires the property as a separate entity. Then that entity may have investment from another entity, which could be, an investment group. And so you start to see how this thing flows, and it gets pretty convoluted pretty fast.
Yeah, and DAOs going after the size and nature of complexity of opportunities like you are, will still want to have a creative legal structure that ensures you're maximally compliant and maximally taking advantage of the opportunity for everyone involved. So I think it's likely that an organization like yours, your DAO, would actually want to have one or more of our LLCs and still have other legal entities, and use them each for the best purpose that they serve.
Do you predict that people will start to have sort of separate legal structures for the voting component of the membership versus the operating? Will that be nested within a larger DAO, so you have like a 3 LLC system as like the general best practice going forward for DAOs?
I saw a slide yesterday at ETHDenver where a prominent lawyer in the space showed a tree that had the root DAO and then 3 DAOs under it. And I can't remember exactly how he was breaking things up. And by the way, he's a member of LexDAO, which is a DAO of lawyers primarily that are doing some awesome work. So, check that out. So yeah, there's a good chance that you'll want to have parent and sub-entities and side entities. Now, for most DAOs, you don't need that, especially DAOs that are just getting started. You can just use our Marshall Islands LLC or whatever makes the most sense for you, obviously. But yeah, as the DAOs get more complicated, you will want to separate the different concerns. And I don't think it'll be just governance, because part of the value of part of the engaging nature of DAOs for the community is not just governance, right? You want to also have some kind of upside, some kind of other rewards or status or other ways of engaging with the governance and the tokenization aspect of the DAO. But yeah, you'll want to have those multiple entities.
So do you know if one of these DAOs, a Marshall Island DAO, let's say, multi-sig wallet, formed exactly like you just described, is that DAO KYC'd when it makes investments into, let's say, MIDAO? Is it subject, do you know if it's subject to Reg D, Reg A, Reg S? Because I can't really get a straight answer.
I'll try to answer this just because I've dealt with the issue and structured around that particular one recently. So you have to be compliant. I mean, there's no way around compliance.
Of course, yeah.
And that's a good thing.
Yeah, we all want to be compliant.
So we had to KYC to create our entity. But like each token holder does not necessarily have to do that. Of course, it depends on your use case, right? So if a DAO is going to go sell a security, then insofar as it does that to U.S. individuals and it's selling a security, then it has to KYC those individuals.
Of course.
And so and that would be probably a Reg D offering.
Yep.
If it excluded the U.S., and it's a Marshall Islands entity, it really wouldn't have to do anything. But let's say it were a U.S. entity selling a security to international investors, then it would have to be Reg S, I believe. Which, but I think the general point is you have to adhere to laws. But in the simple case, where it's not a security, it's a governance right or a commodity, or maybe you don't even have a token, it's pretty lightweight and efficient. I mean, for something like that, you don't necessarily have to KYC everyone because compliance doesn't demand it. But of course, like, we had to KYC to create our entity, and I think anyone would anywhere.
Yeah. I mean, look, to be totally clear, my goal is not to ever circumvent regulations. But
Yeah,
it's
of course,
hard,
but it's important to know.
it's hard to know.
Yes.
I mean, like you can't even get an opinion letter out of most of these attorneys because like they're like, I think this is right. We'll find out when you get the phone call. Basically, like we'll wait for a letter. Is I think the real answer I'm getting in a sort of a roundabout way. But for example, let's say that you guys have a treasury in your Marshall Island entity, and you guys are KYC'd, but you have 3,000 anonymous signatures, right? Anonymous wallets inside of your DAO. Your treasury is $100 million, and I go and I buy this building and it's throwing off 8% or something, and you're like, wow, that's great. We'd love to have some real estate in our treasury. And you guys send me, $10 million or something. Do I have to KYC your anons, which I can't do? Can you even legally do that? Do I just KYC you? Like, how does that work?
Generally, you have to KYC. I'm not a lawyer. Generally, in situations like this, you may have to KYC beneficial owners, which are often, there's a threshold of 10%,
Yep.
Depending on what it is, I think. But my understanding is that no, you do not have to KYC every individual member,
Right.
Or token holder.
That's my understanding as well. And obviously the reason why I'm posing this is I specifically would like to take DAO's treasury and put it into real estate because I believe that it creates a more concrete intrinsic value, pun intended, and allows these DAOs to kind of escape these short squeeze scares that they're having, these like horrible situations where they're essentially being attacked, and you're seeing their token values just like plummet. At some point, I think if you bump up against real estate as a core holding in that treasury, it creates much more stability and still allows for the headroom for the token value to increase.
Yeah, well, what's interesting in what you're doing is you are actually you want a DAO of some sort or some on-chain thing to actually own real-world property.
Yes.
And so you need corporate personhood,
Right.
because only corporate personhood, this imagined concept that a group of people can be one, can actually legally own the property.
Correct.
And so you just need that to tie it into what's happening on chain. And for me, what the Marshall Islands does is solidify that link. Then there's a bunch of other stuff you still have to solve, and there's regulations and blah, but at least you have linked these two things.
Yep.
And the rest, I think, could be structured around. That's how I thought about it.
I can't believe, it sounds like I'm actually going to bring my DAO to the Marshall Islands. I might be customer too.
Yeah, awesome.
We
Sounds
might
good.
seriously get this done before ETHDenver is over.
Yeah,
we
that's
might have to
awesome.
huddle with the team.
Yeah.
Wild.
I mean, I'm your guy. One more connection to make is, so I think it seems to me when I'm talking to people, there's three key legal issues that they're looking at in these types of situations, legal related issues. There's legal entity, there's taxes, and there's securitization,
Yep.
right? Some DAOs have to deal only with one of those three. Maybe legal entity is all you need. Maybe you're a nonprofit and you're clearly not going to be issuing securities. But in a lot of cases, you do need those three things. And our entity doesn't solve for all of those, right? It's a legal entity. But what it does do is it protects the people in the DAO, including the founding team, with respect to the actions they take as it relates to the other issues, right? And so that's really important that you're getting that limited liability as you go out and you work on solving these other legal related problems. At least now you won't be held personally accountable if something goes wrong.
That's really amazing. So it's interesting to me that both of you guys are solving the problem of the plumbing inside of the Web3 space. Together in MIDAO, you're solving the problem of legal entity, which I think is a really elegant solution. I think it's fascinating that you're able to actually get the legal framework done by having conversation with elected officials. I mean, that makes me a little bit more bullish on democracy because I think we're all kind of a little cynical at the moment. So that's sort of my feel good story of the week, I think, right there. And then separately with Shipyard, you're solving the problem of customization of these sort of clunky tools to meet very, very, very specific individual requirements. So for example, the decks that you just described, you're saying any trade under $10,000, you have the ideal pricing structure for any of those. What is that pricing structure and how did you accomplish that? You had to, if you're doing somebody a better deal under $10,000, surely if my algebra it still works. You're compensating by charging more over 10,000, right? Is that how you're doing it?
So here's how it works. In a traditional DEX, you have what's called an automated market maker. And the way an automated market maker works, well, actually, stepping back a moment from there, in the traditional centralized markets, the way stock exchanges work, for example, is an order book. Everyone's putting in orders to buy and orders to sell, and there's thousands coming in a second, and you match, and you have one seller for one buyer. That doesn't work on the blockchain because the blockchain's slow. It can take several minutes for each transaction. And like order, for example, even if it doesn't get filled, and it's expensive. It can cost tens of dollars or $100 to do a transaction. And so it's just like, the blockchain isn't scalable enough to use order books. So instead, these things called automated market makers emerged. And the way they work is you have a pool of capital. So let's say you have a pool in a smart contract on the blockchain of crypto. Let's say it's two assets, ETH and USD coin. And then anyone can go and put one of those assets in and take out the other at a price determined by the smart contracts. And they pay a little fee for that, and that goes into the pool of assets, and it gradually grows, and it creates yield. And so the people who put money in, that's why people put money in the pool, because they're earning trading fees, and they're getting essentially kind of like interest. And so that's an automated market maker. Now, the largest automated market maker today is Uniswap, and by the way, it's like 100 billion a month of volume going through these things. This is like peer-to-peer decentralized. But Uniswap has billions of dollars in liquidity. And the reason they want billions of dollars in liquidity is because it makes the pricing better. The more liquidity, the pricing better. Turns out that's not correct. Actually, if you're doing a small trade, you don't need $1 billion in liquidity. If I'm doing a $1,000 trade, like, what do I need $1 billion in liquidity for? I'm gonna get the same price for that as I am for like, a pool with a few $1 million in it. But yet I'm paying fees to attract this $1 billion liquidity. And who benefits from the $1 billion liquidity? The whale making a $1 million trade. So why are retail traders subsidizing whales? That seems silly. And so we stepped back and we said, okay, well, let's just focus on retail traders and let's make design trade-offs that just prioritize them. And the first thing we said is liquidity is not necessarily a good thing, it's a bad thing. So we capped the liquidity pool. So on ETH mainnet, we restrict the amount of liquidity to $20 million. Now, what does that do? It means we can drop the fees. So the fees are way lower because we don't have to give interest on $1 billion.
So what's your fee structure? So I go in, I make a trade. Let's say I would typically pay, I don't know, $10 or something for a trade.
You might pay, like on Uniswap, you might pay, I don't know, depending on the pool, you could pay like 30 bips, which is 0.3%.
Yeah.
Okay. Different pools have different prices, but we might do half or a third of that.
You're 50 to 67% more efficient
for fees, yes.
By limiting
the liquidity pool. Now there's a trade-off for that, which is the pricing is a little bit worse. But for small trades, it's basically the same. For large trades, it becomes terrible. So like it's a terrible place to make large trades, but it's a great place to make small trades. And that's the design trade-off, and that's why you should go to Clipper. It's not like we're saying you get better rates if you have a small trade. It's just by capping liquidity, the outcome of that is that small trades end up being able to get better prices, and large trades end up getting worse prices, and so the whales can go elsewhere.
That's amazing. That's really interesting. And so the way you scale your business is you just kind of grow laterally. You just open up new liquidity pools on demand, capped at $20 million, and roll into the next one, and then just funnel all those trades to the appropriate liquidity pool. How are you balancing where the trades go? We
actually have a couple other innovations under the hood. So we have like one pool for all the assets. Creates a lot of capital efficiency. There's a lot of retail trade flow out there. So
how much retail trade flow is there?
That's a good question. I'd say by dollar volume, it's probably about 20% of the market. But by number of transactions,
it's like 80%.
It's 80%. It's most of the market, right?
Yeah, for sure.
And so that's who we serve. And most of our volume actually comes through DEX aggregators, which like kayak.com for flights, you put in the trade you want to make, they'll show you where the best price is. You go where the best price is. And so that's how people find out about us a lot.
Wow.
Most people, if you've done DEX trades on DEX aggregators, say 1inch or Matcha, you've already used us. You just may not actually know that you have.
Did I use you and avail myself to your better pricing, or did I use you and somebody else scalped me and took the difference between what I would have paid on Uniswap and what they paid?
No, you would have got better pricing.
So I got better pricing and I didn't know how?
Probably, yeah.
That sounds like a problem to me. I mean, shouldn't it be the case that when you settle, shouldn't like Etherscan tell me that I got that done at, what is it, Clipper?
Well, it does if you looked into it. I mean,
in a conspicuous way. I mean, I don't think the normal retail trader is going to sit there and be like, I'd like to just inspect my Etherscan and, I'm going to go into this hash lib and look at my transaction.
Yeah, probably not. But, I don't open my car hood much of any time these days. You know what I mean?
But you've got a Ferrari engine in there.
Yeah. Well, now everyone knows they got a Ferrari engine in here.
I mean, look, I think your problem right now is the problem that Intel solved by putting the Intel sticker on the laptop, the Intel Inside sticker. It's like, how do you sell the value of something that the consumer neither understands nor sees, right? And you have to create a visual cue for them to understand that there's a Ferrari engine underneath this.
That's true. And if you're into cars, you like Ferraris, you want to get the best prices, you can just come to Clipper.exchange directly. Man. And you will get the best performance.
It's getting chilly in
I
here.
recommend it.
Ooh, it's getting chilly. I like it. Look, you got to show your thing.
That's a certified shill right there.
That's a certified shill. Cold shill. Cold shill. That's amazing. So, okay. The other thing you could do, though, right, with Shipyard, is make the next Clipper that solves anyone's problem. Am I right? I mean, like, isn't it like a customizable platform?
So Clipper is, the reason it's better is because it's not customizable. It's laser focused on a specific user.
Custom built. I should say custom built.
What we are doing next is building other DEXs that are laser focused on something else.
What's another problem that you could solve or are solving for different DEX?
So there are a bunch. Retail traders, I think, are our most important focus. Whale traders are also worth building something that works for them, and isn't screwing retail traders. There's also a lot of tokens out there that, Clipper serves the largest tokens, like BTC and ETH against stables, but there's other tokens out there. There's a lot of ways to provide better value. So a lot of different types of traders, instruments, et cetera. And so we are a very research-forward company, and we are researching a lot of those areas.
So I call Clipper a plankton product, right? It's a product for the little guys that the whales eat, generally, right? Which is, I love plankton products. It's super populous. What does a whale product look like? Do you have unlimited liquidity? Like, how do you solve the problem? What is the whale's problem? I mean, I guess whales don't have problems.
Well, anytime in the traditional markets you're doing a very large trade, it moves the market, right? If you sell 10% of a company, the price plummets because you're trying to sell all this stuff, or vice versa. So that's a tough problem, and it also deserves a solution that doesn't affect retail traders. And so, and it turns out there's an answer. And to figure out what that answer is, go to Clipper.exchange, join the Discord, and stay posted.
Okay, so you're going to come out with the whale product solution?
I wouldn't hold your breath.
Okay.
But it's one of our areas of research, and I think there is an answer there.
I mean, look, the reality is that if whales are crashing markets, it's also a plankton problem. And so, the whale solution ultimately is going to give whales disproportionately better pricing execution than plankton. But
this isn't a zero-sum game, right?
It's not a zero-sum game.
Everyone should get the best experience, and everyone's better off. In fact, that's how markets work, and raise humanity as a whole. So and I think, just to be clear, whales are an example of where you could carve out another exchange, right? And I'm not sure that's where we go next. But if you're curious, you should go to our Discord and stay posted.
Cold Shill. Look, I think if I'm solving that problem, like I've never thought about it before, so it's just pretty stupid for me to just start waxing pedantic. But my instinct is that there's only really two like primary ways to solve the whale problem on execution. One of them is you break up those trades into very many smaller trades, and maybe those get funneled to many Clippers or Clipper liquidity pools or many companies like Clipper, so that they have like uneven execution, but they're more or less market fit versus like tanking the market because you want to sell, you know, $1 billion worth of a thinly traded security, right? That's one way, and the other way is, you know, maybe these guys are, which is what happens, you know, like if you talk to old floor traders, you know, they talk about the swap, you know, like the guys on the floor, you know, they'd be like, put the swap sign up, and like it's basically like, I'll give you $1 billion IBM, you give me $1 billion, and like it gets printed after it's done, like just happened, you know? So those are, I think, like the two primary ways that you might solve that whale problem. And again, the beneficiary, I do think that Plankton are, if not the net beneficiary, they get tremendous benefit out of it. Because one thing that Plankton don't like is watching their share price or their coin price get decimated.
Yeah, like Plankton thrive best in calm waters. When you get a whale doing jumps, splashing their tail around,
Yep.
It's not a good situation for Plankton. And you know, and that's important because Plankton actually, you know, take most of the carbon out of the ecosystem.
Yeah.
We're
just rolling hard on this metaphor. We've got ships,
yeah, we're going
islands,
deep on the metaphor.
whales, plankton.
Yeah. They take the carbon out.
Reef DAO.
Yeah, they are the bedrock of our food ecosystem.
Yeah.
So Plankton's where it's at.
Yeah.
Yo.
Can I get some color from Captain Ahab on that?
Ahoy, matey. I mean, I will add one thought on the whale and plankton issue as it comes to exchanges that I think is kind of interesting.
Commonly described, the whale and plankton issue. Go on.
Yeah, the whale plankton issue. You know, I think that one thing I heard that I think is really interesting is in traditional markets, TradFi, right? Institutions have direct access to the markets. They kind of are the markets. They make the markets. And retail investors have to go through intermediaries to try to interact with those markets, right? And hopefully get a good deal. In DeFi and DEXs, it's the opposite, right? Retail traders can go right to Clipper, get the best possible deal, no problem. If you're an institution and you want to get the best deal, because of these issues, you're going to have to deal with either OTC, right, over-the-counter trading, dark pools, which are really common in TradFi, where you have like private trading pools that the rest of the market doesn't get to see. Trading desks, like you're talking about, like right, actually getting humans involved and doing swaps and calling up their friends and trying to get the best deal. So it's very cool that in DeFi, it's the individuals who are directly participating in the market that can more easily get the best deal. And of course, we still do need solutions for whales, but I think that's a very fun thing about being a plankton in this ocean.
Yeah, absolutely. I mean, I see all these people on Twitter who are just like, Web3 is bullshit, DAOs are, you know, this is all stupid, that's just an LLC, and like they just constantly take this like reductive, dismissive, derisive posture in the whole space, and they don't see that distinction, which is an enormous distinction. I mean, it is an enormous distinction when we played a game in traditional markets where we knew that we were disadvantaged by virtue of having fewer chips. We knew we were getting chip bullied, and we still bellied up to the table and played this game knowing that like we were going to get pushed off. And now we have this completely inverted market structure, and people aren't celebrating that. I mean, to me, it's like one of the great victories of modern markets.
Yeah, I also think there's two types of whales. So you have like individuals who are whales. They got into Bitcoin early or Ethereum early or however they got their fortunes. And then you have like Goldman Sachs, right?
Yeah.
Like Goldman Sachs could buy half the value of all the Bitcoin out there, and it would be like a drop in the bucket for them, right? Maybe a little bit bigger than a drop. But I do think that's an important distinction. And institutional players that are participating in DeFi, I think have a whole different set of problems even than large individuals. So maybe we need plankton, we need whales, and we need dolphins.
I mean, I think Goldman Sachs is sort of like the whaling industry.
Yeah, good point.
You know,
that's a good way to look at it.
And they do need solutions. It's going to be, It's going to be really interesting to see if guys like you end up becoming the big winners in the space by creating these solutions well in advance of their actual utility in some cases. Because like we know that they're going to need these things. They still don't know that they need Bitcoin, a lot of these institutions. But we know that they need Bitcoin. We know they're going to end up buying Bitcoin. You could be building the solution to the problem they don't even know they have yet. And your customer zero could be like Goldman Sachs. You know, I mean, like, that's wild.
To bring this full circle,
Are you about to cold Shill again?
No, I'm not. But the difference is it's not just me doing this. It is actually an us, because it is decentralized. Not only is that it's both a necessity and a feature. It's part of what makes it more effective and makes it successful and makes it work. And that is why DAOs are really important, because it actually can result in better products, better user bases, better network effects. And it's us doing that together instead of what it used to be, which is like a me or an I doing something first.
So let's talk about your cap table.
And so DAOs are super important.
Let's talk about your cap table. Like, tell me, who is we? Like, you're tokenized. I can go buy some Shipyard coin right now, and I'm in your cap table.
So Shipyard Software is a software development company. Mm-hmm. We are not tokenized. Mm-hmm. We did raise some money from venture investors to
Web2.
Yeah, I guess you can think of it as Web2. Yeah, I mean they're like crypto funds, but separately there is the DAO that governs Clipper, right? Like we developed the code initially, we published it. It's now, I guess you could say, owned or governed by the DAO. The DAO will have decentralized governance. That's where the, I guess, opportunity is, I'd say. And we do not have a token yet today. I would not comment on it, even if we were going to have a token shortly. But were something like that to happen.
That's the reverse Shill.
That's the reverse Shill, I guess.
I like the reverse Shill. That's a Sicilian Shill. We call that the Sicilian Shill. It's like backhanded.
But the intent there is that like the governance is actually in the users themselves. So to be frank, like Shipyard Software, it is actually unclear how we make money.
That's the most Web3 shit I ever heard.
Yes, but there's a lot of value being created, and in my experience, I've done I sold a Web2 venture-backed company, and I worked in venture capital for a while. In my experience, like, if you are creating a ton of value and a space is rapidly evolving, it'll figure itself out. I used to think that sounded naive. Now I actually don't think that sounds naive at all. Having a clear business model in a space that is not creating a lot of value and is not evolving rapidly, that is a bad space to be. So I'm not too worried about it, but it'll materialize, and I feel good about it.
I think you're absolutely right. I had a friend who's been sober for like 18 years, and he gave me this quote that he learned in Alcoholics Anonymous for why he doesn't go to bars. And he's like, if you sit around a barbershop long enough, you're going to get a haircut. And if you sit around a robust space with tremendous amounts of transactions, enormous capital flows, and great interest from like voracious consumers, you're probably going to sell something.
Yeah, like it's going to work itself out.
It's going to work itself out. I'm pretty sure you're getting a haircut. Like, you'll be okay.
Yeah, so we focus on delivering value, growth, being early, and like, I'm confident, I have faith that we'll be well positioned for whatever materializes from that.
Hey man, I'm hoping for it. I wish you great luck. I think I'm going to put a button in it because this has been a wide-ranging discussion, much more interesting, frankly, than I thought it would be at first blush. No offense, but I didn't think that the legal formation conversation was going to get that interesting. Nor did I think I would potentially be customer number 2. Which I really actually think I may be. So really appreciate you guys coming down here today. I hope you guys have a good ETHDenver. I don't know what your objectives are while you're here. Actually, do you have some? Like, is there something you're trying to get out of ETHDenver? Maybe somebody watching can help out.
Well, I'd love to do a quick shameless shill as well, if that's all right.
Cold chill.
You can find MIDAO at MIDAO.org, so MIDAO.org. Follow our Twitter, join our Discord, join our community, stay abreast of what's going on. If you want to follow me on Twitter, I'm the Thriller and then an underscore. I hate the underscore, but it's part of my life.
Your underscore is garbage, dude.
So please look us up and get in touch if you're interested in learning more about MIDAO. Do you want to do another shameless shill as well, or?
He has to.
I think I might have shilled myself out.
No, man. You got one more shill left. You got it.
You can go to clipper.exchange and trade. You can also see us on Twitter at clipper_dex. You can also follow me at Mark Lurie. That's MarkLurie on Twitter. And you'll hear more on all of those channels. I was fortunate enough to avoid the underscore.
Yeah, you're lucky. I mean, I don't need the mic. I'm mic'd, but your underscore is complete trash. I think I'm going to change the name of the show. I mean, this show doesn't have a name. It's not really a show. It's not really a real thing yet. I think it's going to be called Balcony and Shill. I think that's the move.
You'll have no problem getting guests.
Yeah. Anyway, so this has been the first episode of Balcony and Shill. I hope you guys enjoyed it. Don't forget to use their products and tune back in. I guess we're going to be doing this a lot while we're here. Take it easy, guys.
Whoa.